The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, our aggressive growth strategist, Brian Bolan, is going to do a deep dive into a stock known as Pep Boys. Where'd you get this one at? On the radar, I guess, huh?
Yeah, this one just popped up on the radar, and it fit, the multiple hits on the screen there that told me that this was a good stock to take a look at for aggressive growth.
Yeah, Manny, Mo, and Jack.
Manny, Mo, and Jack. And, it's a small cap stock, and it's in that automotive, auto parts space.
Right.
And as I do these normally, I look at the Zacks rank. It's a number 1, and we see the growth style scores are pretty good, A and B for growth and value. It recently broke a string of 3 consecutive misses of the Zacks consensus estimate. So that isn't necessarily, the thing that you want to see. You want to see 3 consecutive beats already behind it, as opposed to just breaking the bad streak.
Would be nice.
And then, recently we've seen, car sales looking good. And this is normally like what I would just take a look at, and I would say, here are car sales by month over the last 12 years or so, 2003 to 2015. We can see the trough down there, the Great Recession, that little spike in that trough, that would be the cash for clunkers. But we're really just basically getting back to just about normal, things where they were before the Great Recession.
These are new car sales.
These are new car sales.
Okay.
This would imply that the fleet that's out there is aging. Because the number of new car sales isn't being replaced as it was in the past. And we can say that some of that was, the cars are getting a little bit better, they're staying on the road longer, people are, maybe being a little bit more conservative with their money, but then there's also the idea that they're, using those auto parts to preserve the car a little bit longer and a little bit longer. And if something breaks, they're going to go buy a new part, put it in,
right,
as opposed to let's get rid of this car and get a new car.
Mm-hmm.
So at this point, normally we would just take a look at the chart and that we'd be done with this stock. But I said to myself, when I looked at this chart, it didn't seem right. This move from $9 in May to $12, that's a 33% clip in a quite, short time horizon. And it didn't make sense with the misses. And we've known about the car story for a while. So I decided I was going to take a deeper look into this. And the first thing that I normally do is I look at future revenues.
Okay.
Look into the future, if you will, Terry.
Right.
And this is what the analysts, I was hoping for a bigger laugh on that one. The analysts were saying that this is how future revenues look. It's in the green line here. The red line would be the stock price. Normally you would see a good correlation, and we see that here. But we haven't seen that big move up in future revenues to explain the stock move up. Moreover, then I took a look at how the last few quarters have gone. This shows, that the company is actually not beating on the top line. You would really want to see that. We've only seen one instance of that here recently, and we don't see, real big sequential growth. If we're going to see like a real aggressive story, something that we would get both legs behind, we would go after something that would have sequential revenue growth. We can see that from these numbers here that, when the red line is moving lower, that's the reported line. We don't necessarily want to see that. We do see limited year-over-year growth, but we really, for a real aggressive story here, we want to see sequential growth.
So after you went back to the future, you just went back.
Outstanding, Terry. Right.
Okay. I got it now.
Right. Back to the future, and now I come to this slide where I think I'm going to tell kind of the story of why the stock really moved up here. We see, this is a little bit about institutional buying and what happens. So I took a look at the chart here, and I just pointed out, 4 key ideas here. Gamco is Gabelli Asset Management Company. They increased their stake and wanted to have 5 directors 5 nominees on the board of directors. So, a move like this is telling me that there's an institutional move saying that we're going to be, trying to make something happen here. We're going to become, instead of just passive investors, we're going to become activist investors. Mm-hmm. The second thing is when number 2 here on the chart, we see that correlates with a big spike up in the stock price. Wall Street Journal says that private equity firms might be interested in buying this company, and that brings a lot of speculation in there as well. We see that Greenhill comes in later. I should say that number 3 on there is when we have earnings. They beat, and then the company also says that it's okay with 3 of the 5 directors that Gabelli Asset Management has nominated.
Okay.
Then number 4, we have a new CEO come on board, and Greenhill, discloses a stake as well.
So it's a valuation story.
Well, yeah, this is the idea of where there is a good valuation, at the beginning here, possibly at phase at number 1 there when Gabelli only had a smaller, but they raised their stake. The valuation starts to look even better for them. So speaking of valuation, let's take a look at these numbers here, and we can see that the earnings story is the one on the very bottom here, and that doesn't really necessarily always tell the tale of the tape. Earnings were coming in over the last year or so, but have only recently turned back up with the beat. We can see that the forward price to earnings of 48 times is very healthy. It's a very big number. When price to sales is 0.3 times. So you're getting, the total value of the company is less than 1 year of total sales. It's actually only 30% of it. If we look at revenue and expected growth, we can see that, for fiscal 2016, which is just 1 month added to fiscal 2015, we're right about 1% for Pep Boys, whereas the industry is looking at just about 15%. The difference here is that Pep Boys is looking at 600% earnings growth. So finally, if we take a look at the industry, if you will, the other names that are in this space, we can see that there's a couple other rank 2s here. So those are buys, a couple rank 3s, and a rank 4. Our rank 4 today, Advanced Auto Parts was just last night, and today is, you always help me with this.
The date?
The date.
Oh, July 7th.
July 7th. And Advanced Auto Parts is now going to be added to the S&P 500 that was released last night, so it's getting a little bit of strength there. It is basically 20 times the size of Pep Boys. Pep Boys, $600 million market cap. Advanced Auto Parts is about $12 billion. They have 6,600 stores, whereas Pep Boys has around 600.
But with all those numbers in your head, it's wonder you couldn't remember the date.
Exactly. Can't keep it all straight, Terry.
Right, that's right.
So
that's what I'm here for.
Right, and then I also just take a look at the industry averages here. Where are these other names selling in terms of price to sales and forward PE? And it's kind of a menagerie here. We see a low PE, high price to sales for some. It's just a lot of confusion going on in this one. So I wanted to take a longer drive, if you will, into this stock and take a look at it to see how it works. Because it's not always the earnings estimates, it's not always the future sales, and sometimes it is it's a lot of times it is the institutional play, the big power buying. That will really, work on the stock price in the short term.
And that's what made this attractive to you.
Right, and that going through it, it's not always just one way to skin the cat.
Right.
There's technical analysis, there's fundamental analysis, there's earnings, and then there's obviously institutional buying. But when you take it all into account, you get a better idea of what the story is, and especially for Manny, Mo, and Jack.
Okay, do you own it?
I do not.
All right, check out other stock information on our website, Zacks.com. If you're not there already watching this video, you can link to all of the stock information right off the homepage. If you're watching this on YouTube, don't forget you can subscribe to these videos and comment on them as well. With Brian, I'm Terry Ruffolo.